Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of November 18th, 2024. We're going to talk about where we are in the S&P 500 year to date, how the sectors, the different sectors performed last week, what it looks like moving ahead, the trends and trades that are working for us. And we are going to talk about the economic news that came out as well as interest rates. And then we will jump into the trades on the live option trading platform. If you appreciate the time and effort that goes into making these videos, go ahead and hit the like and subscribe button down below. Also, download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. All right, guys, let's look at where we are in the S&P 500. We ended up at 5870, and you can see this is the 5-day chart. So we're down from 59.95 at the start of last week, so about 2% down. We're still up 23% year to date. We started the year at 47.43, so we're still up quite a bit, trending up. Forward PE is about 22 right now, so it is higher than the 10-year average of 18. So stocks are pretty well valued right now. Here is the year-to-date returns, and you can see why we're up so big. But utilities are up huge. Financials are up huge now, 32% year-to-date. The S&P 500, that 23% that we talked about, and then 30% on communication services. And this includes those names like Netflix, Meta, who else we got here? AT&T, Disney. Wow, AT&T's up 35%. Wow. Okay. But those are the different sectors and how they're performing. And then if we look at the economic news, let's start out and take a look at this week's news. We've got Thursday, it looks like we've got PMI coming out Friday, and we've got on Thursday, it looks like jobless claims, 220,000 expected. And then moving forward, or actually last week, we had on Wednesday, we had core CPI. It came in at 0.3 as expected, so that was normal. But then on Thursday, we had PPI come in, and it was 0.3, and the year over year is 3.5, so a little bit high on that. And then, yeah, that was the major news last week, and what we've got coming out this week. Interest rates, there's a 61% chance of another cut, a quarter point down to 4.25 to 4.5. That Powell is likely to make in December, and we just had a quarter point last month. So right now we are at the 4.5 to 4.75%. But I do expect interest rates to continue through next year. If you look at June of next year, down to 4.25. So it looks like it's slowing down a little bit versus previous. The fear and greed index, because we had that drop in the market, the extreme greed that we had previously has dropped down to neutral. So you'll see as we go through the trades, getting a little bit longer now since we've had a little bit of a pullback. So the earnings, FactSet Earnings Insight, I like to look at this report, but you can see the earnings growth for Q3 was 5.4% for and then we talk about the PE here of 22. And then if we go to, it looks like page 11 this week it's on, but we can look at for Q4, we're expecting 12.1% earnings growth, and then revenue growth of 4.8. So still really good. And that would put the overall year at 9.3 and 5. And then for next year, we're looking at 15% and revenue growth of 5.7%. So earnings growth of 15%. So everything is expected to look good going forward. So if we jump into the trades that we have on, the first one that I've got on is oil. And I've got a video that I'm actually going to do coming out on this. But the reason that I'm in this, I mean, there's so many factors that go into crude oil. And these are the futures contracts. It's actually options on futures. And I do put spreads because we are at a low. You can see this is the 1-year chart. And we're down at the bottom of it. So I think there's a good chance. I mean, there's a lot of factors. Like I said, we'll be doing a video on it. But You can see the RSI. I've added the RSI down here, and then I've got the Bollinger Bands in white, and then I've got the 200-day moving average. So you can see we're way below that. And then the 50-day and the 13. The 13 is the green, and the 50 days the red. So those are the items that I track. And since we're at the bottom of the Bollinger Band, that kind of corresponds with the RSI. So I don't know that you necessarily need both of these, but it basically says that we're oversold right now and that there likely could be a move up, and you can see we're at the bottom of the range. So that's why I'm long, and I've got the max, I usually don't go for spreads wide, but you can see I have, and I've got $1,200 in extrinsic in oil. Apple, I'm looking to put on next week because it did have a bit of a drop. It's at 225. I don't have this trade on now, but I put a placeholder, and I'm looking at an iron condor because IVR is still pretty good, 21. But if you look, it's been trading in a range. So I'm looking to stay within this 235 to 215. What was my trade that I was proposing? Yeah, 215 to 235. So I just want to stay within that range, continue within that range over the next 34 days, and then I will collect. Actually, I've got this above the market. You can see at 486, but actually for this spread, it would pay 286. So 286 bucks for the iron condor. Let me know if you've got an Apple trade on. AMD is another one that's been hit. All the semis are down right now, so I think it's a good opportunity for the semis and the AI stocks. So AMD, I'm looking to put another tranche on. I've got a 145, 135 put spread. We're down to 135 and a 35 IVR in AMD. So it has moved down quite a bit just in the last 30 days, though. Look, I've made $968 trading AMD. So I'm looking to continue that. And that's what I'm looking to do is to actually, if we put on the curve mode and then analysis, you can see as we're profitable with what I've got on now down to just below 140, but I need to move up now because we had a big move down to 134 previously. But like I said, I'm going to throw another one on, and you can see we're way overbought. RSI is way down. We're at the bottom of the Bollinger Band. So I am looking for a move up, and let's see when earnings is. Yeah, there's no earnings coming out. I keep over here on the left. You can see the earnings that would pop up if there's earnings. Coin is another one. I've got an iron condor on 270 to 330 range, $10 wide, and I've got two sets of them. So $1,200 in extrinsic, as long as we stay in between that 270 to 330. We're at 305 right now, and look at that IV rank. IVR is 84, and it's because we had a big move up after the election because Trump is pro-crypto, supposedly, and we're at the top end of that RSI, so a little bit overbought, but I do think we're going to stay in that range now. I like Coinbase. I like the CEO. And then we're right in the middle. So we, as long as we stay in this range over the next 34 days, then we can pocket another $1,204 in extrinsic. DraftKings, I did buy. It was down last week a little bit, so I bought another Leaps, 426 days out, and actually it moved down. But hey, I'm okay with it. We've done really well in DraftKings. Like over the last year, we've made almost $3,500. Just trading DraftKings and with the Leaps and then selling calls against it. The 44 call against the 39. So when there's an up day, hopefully sometime next week, then I'll sell another call against this Leaps option. But I'm going to wait for an update to do that. ELF is and again, my target. Let's look at my target for DraftKings. I think it's 50, if I recall. Let me see what I've got for DraftKings. Yeah, I've got a $50 target over the next year, and ELF is another one that's moved down. It's at 121 right now. You can see bottom end of the it moved up just recently, but it is still for the year down pretty big at 121. My target for ELF is up there pretty high as well, a $200 target. So it's a beauty supply, so it does well in a recession as well. They beat earnings in November, top and bottom line. So I love this stock and want to be long it. So I'm looking to put another put spread on because I don't think there's too much more risk to the downside. With it doing as well as it is, and we're still in the profit zone, but I'm just going to throw another tranche on and collect more money. For this 120, 110, right near the money, I can collect $420. So then we would be risking on a $10 wide, the difference between 10 and 420 is 580, so $580 risk. But hey, if it tested or goes down even further, then I just roll to the next month and collect more premium. So uh, ELF is one of my favorites right now. Gold, it looks like I've got another trade that I'm looking to put on. I went through these just earlier this morning, but I'm looking to close out the call side because look, we're at 95%. We've almost collected all the premium. The difference here between 44 and 13, there's only 30 bucks left in in premium. So I'm just going to close out the call here. I've still got one tranche on, and then I've got two put spreads. Um, and then I'll wait for an update and then throw on another call spread. Um, and that's kind of how I play that. But right now, there's no premium left in this, so I'm going to close it out. And you can see right there on curve mode and analysis, the profit zone. We're still in the profit zone, even though we had a big move down right here. And you can see we're at the bottom end of that RSI, so that means it's over sold, and there's a good chance that it may move up. So that's gold. uh, Home Depot, I put that on. They had earnings last week, and there was a pretty good drop. Um, I threw on the Iron Condor. We're at the bottom edge of it. Um, collected. We've got 345. So I collected $355 on this. Between 400 and 440, we're profitable. So, and it's been trading. I think we're going to stay in that range, but we shall see. But I haven't traded Home Depot a lot. If you have, let me know. Let me know your thoughts on that. IWM, the Russell, Iron Condor, $10 wide between short strikes are 230, 245, and we're in that profit zone. We're at the bottom end of it, and we had a big drop down, so we're kind of looks like fairly valued. We're still in that range, um, trending up, but I like the Iron Condor and IWM right now. L3 Communications 240, 270. We had a bit of a move downward at 246, and I like trading Iron Condors in in L3. Let's see what I've got as a target price. My target price for L3 is it's right around this range. So, but we are at the bottom edge, and I think with the election, I think we're going to spend more now on defense going forward. So I do like it a little bit long, and I see it continuing to do well, and defense spending is going to continue to do well. If we look at the last year, I've been pretty much trading Iron Condors and made $1,500 doing that. So I'm going to continue doing that. I also have Lockheed Martin on. I'm looking at putting another one on a call spread. Oh no, I'm looking at closing out the call spread because there's no premium left in it. Same situation that we had with the other one, and we're going to close out the 590,600, and then I'll throw it on again on an up day. But we had a big move down in Lockheed, so I think this is a great buy right now. It's at the bottom low RSI as well, so I like Lockheed Martin, and it's done well also, and you can see that profit range that we're in between. uh, Actually, we're below it right now, 534, so we need to move up. Okay, Micron. This is actually one of my favorites. All the semis, the AI stocks are bargains. They're on sale right now. So $96. I've got three put spreads on in Micron. So I'm not going to add more right now. But even with this, I'm profitable at 96. We're at 96 right now. So I'm right at the edge of that profit zone. But I mean, look at how my target for Micron is I believe 200. Let's see. Um, Actually, I've lowered it, but it's like 160. I've got conservative, but I think it's going to do great going forward, especially with the rate cuts coming. I think that's why, because it looks like the Fed's slowing on rate cuts. Some of the semis were kind of dropping over the last week, but you can see it's at the bottom of that RSI right now. So I expect them to pick up and do well going forward over the next week. So I'm going to stay in Micron long. Netflix, this is one that I kind of played. I love Netflix, but oh, actually that Tyson Jake Paul fight last night, I watched that on Netflix. That was pretty underwhelming. It wasn't great. But 840 to 850 is the call side, and we're at the top end of that Bollinger Band and the RSI. So I just threw on a call spread against it, thinking there's going to be a pullback, and I wanted to have some negative on, but we're still below it at 823 and 840. And look, I've already lost $142 on this. Um, but if you look in the last what 60 days, we've done pretty well, 270 bucks. So it's not like we're getting killed. Netflix has been pretty good for us over time, but you can see the chart, and then you can see we're still in that profit zone on the curve mode. By the way, this is the Tasty Trade platform. I also use Moomoo. They've got great charting software, but both are great for options. There's links down below and benefits if you use the link. So check those out if you're not using either one. NVIDIA, I'm looking at throwing this on a $10 wide put spread because the AI semi stocks are on sale. I mean, NVIDIA is dominant. Their Blackwell chips are sold out. I need to do an update on NVIDIA, but I mean, there's so many videos out there on them. But you can collect $300, 315 bucks right now. I've got it above the market's place Monday, but for a 135, 125 put spread. And again, there's been a bit of a pullback. We're in the middle of the range, but I like NVIDIA long, so I'm looking to throw one on. I like to have something on there unless it's at extreme at all-time highs, but it's not there right now. So Oxy, I'm looking to close out. It's a Buffett stock, but it hasn't been doing a whole lot, and then there's not a lot of premium when I sell calls against it. So I'm just going to close this out. I've decided there's better trades. Some of these others, AMD and the Qs, there's no reason I don't think with Oxy for me to have it, because I do have ExxonMobil and I've got crude on right now, so I'm okay without it. I'm gonna close that out. Qs 485 to 540 are my short strikes. $10 wide iron condor. We're up and trading within a range, and we are in the middle of that range. So I'm okay with where we are in the Qs right now. I did a video on doing a leaps option and how to generate 10K per month in the Qs. I'm going to wait for a pullback before I throw that on and buy that leaps option and sell the call against it monthly. But I'm waiting for a little bit more of a pullback, and then I'll throw that one on. But right now I'm still doing iron condors. The IVR is still good, and we're in the middle of that range. SoFi has done really well for us. Um, we're SoFi, just in the last 30 days, we've made over 4 grand. So it had a big move up, and you can see right here, way over bought. So I've kind of lightened up on my SoFi. I sold out of all my leaps. I've got one just for tracking to keep. But any pullback that's significant in SoFi, then I'll buy some of those leaps again and start accumulating, because I love SoFi long term, but it's had too big a move too fast. UAL, same situation. I wanted to have some negative on to profit when the market goes down. It's at the top end, so I threw on a call spread. Haven't traded this a lot, but apparently travel is supposed to do well moving forward. So Ulta is another one. I have traded it, and it's at 365 right now. I think it's fairly valued. Looks like we're at the bottom end of the RSI and Bollinger Band. So I'm looking to go long, because my target for Ulta I know is much higher. Let me see what my target for Ulta was. It's pretty significant. It's 450 and we're at 365. So I'm expecting a big move up. It's a great recessionary stock. People, Beauty is still, women need their makeup, and at least my family, my girls and my wife are not going to skimp on the makeup should times get tough. But I think Ulta's a great recessionary stock, and I think there's huge upside to it as well. But $325 we can collect on a 350, 340 put credit spread, and no earnings coming up, I don't think, on Ulta. Let's say 12.5. There is earnings, but hey, I'm okay with that. I think the risk to the downside is low of it dropping much further. It's already kind of been hit, so I'm okay with it. Walmart, another one that had a big move up, so I'm kind of betting against it. It's not that I don't like it, but I just threw on some call spreads in case there is a pullback, and wanted to have that on. And then we've got X, U.S. Steel. I think, building and going forward, we'll see what's spent on that. But X right now, we're still in the profit zone, but we had a drop down quite a bit. So we're kind of oversold, but the IVR is huge at 96. So let me see how many contracts. I've already got, three on the put side and then two on the call side. So I'm a little bit overweighted up, but that seems like perfect place to be right now for me. So I'm fine with that. ExxonMobil is the last one. We actually just closed out the November, but ExxonMobil's been doing real well for us. I think over the last 30 days, let's see what we did. Yeah, a couple $100. I just closed out, or actually it just expired. I let it expire. The 130 call, and also the put. So my November just expired worthless. So we collected the complete premium. I wasn't too worried about it moving beyond the 115 short put or the 130 short call, and we stayed in that range and just expired worthless. So occasionally I won't roll and I'll just let it expire, but I've already got one on in December. IVR is still good. I like that trading range, that it's been trading in. So I like it, down anywhere between 110 and 125. When it gets down lower, I'll be a little bit longer. When it gets higher, I'll be a little bit shorter. So, all right, guys, I put a link down below for the free options workshop. Remember to hit like and subscribe. Leave a comment, ask a question. Let me know what you're trading this week, and see you in the next video.